Hello everybody. French GDP growth surprised on the upside during the second quarter at 0.5% Q-on-Q. And the country benefited as well from an increase in incomes. Corporates benefited from an increased profitability, and it helped to have higher margin rates at 33.2% during the second quarter compared to 32% on average during the last 20 years. The increase in sales price thus supported profitability, notwithstanding the fact that the costs have increased at the same time. According to INSEE surveys, cash position of French corporates have remained quite good in parallel. So the financial situation of French corporates is quite good, and it helped to finance an investment effort of these corporates. The investment rate of non-financial corporates is 26.1% during the 12 last months. It was 3 percentage points lower during the last 20 years. So the French corporates have used their good financial situation in order to spend a bit more. And this is not the case of households. Households' gross disposable income, or GDI, has increased by 9.1% during the second quarter year-on-year. This is more than inflation. Inflation was 7% during the same quarter. So the purchasing power has increased by 2% year-on-year during the second quarter. If we consider just net compensations, including the variable pay, the increase was just 6.6% during the second quarter, and it was less than inflation. Capital income growth was a driver of purchasing power growth. Capital income grew by 20.8% during the second quarter year-on-year. It was driven both by interest rates and profits. However, despite favorable income evolution, both household consumption and investment have decreased at the same time during the second quarter. In parallel, the saving rate has evolved to 18.8% during the second quarter, and this is a record level since 1979. There are two kinds of savings. First, you can invest in a home. And second, you can do financial savings. The investment rate of households has decreased during the second quarter, so this is not the explanation. The other one, financial saving, is the good one, since the financial saving rate of households over gross disposable income reached a record high. We expect that these financial saving rates should increase to 8% of gross disposable income this year. Why? Lower durable goods and investment spending by households are well explained by higher interest rates. It involves a loss of opportunities, and we don't buy the precautionary savings story, as unemployment fears of households are quite low. And the behavior of households is not expected to change during the next quarters. So what does this mean for growth? It means that demand is quite low, and it will be difficult to observe a significant GDP growth in 2024. Perhaps it should be difficult to reach the goal of the government for the next draft budget bill, which is 1.4%. We expect 0.5% for the next year. So good accounts doesn't make, as we say in French, always good friends.